we have everything focused on the long term, but it takes short terms to make up a long term. So by 2030, we are in print for our base case as saying that we believe Bitcoin, which is now closing in on 40,000, will be at 640,000 by 2030. That's our base case. The Bitcoin ETFs have increased the probability of our bull case, which is $1.5 million.
Cathie Wood, the founder, CIO, and CEO of ARK Invest, heads an asset management firm specializing in actively managed exchange-traded funds focused on disruptive innovations. Engaged in the crypto and digital asset arena since her firm's acquisition of $100,000 worth of Bitcoin at $250 per coin in 2014, Wood's recent collaboration with 21 shares for a Bitcoin ETF gained SEC approval, now among the 11 accessible Bitcoin ETFs for investors. Foreseeing a substantial surge in Bitcoin's value, Wood suggests a potential price of $1.5 million per coin by 2030, citing comprehensive research on Bitcoin, blockchain, and disruptive technologies. Her optimism is further buoyed by the approval of spot Bitcoin ETFs, enhancing the likelihood of her bullish Bitcoin scenario. Beyond Bitcoin, Wood expresses confidence in cryptocurrencies like Ethereum and the broader blockchain sector, predicting a similar trajectory for spot Ethereum ETFs. In a recent interview, Wood addresses impending crypto regulations by Congress and the ramifications of Bitcoin ETFs on crypto adoption. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
I think one of the reasons for the regional bank crisis was the Fed raising rates at a faster rate than it ever has, up 24-fold in 17 months. Never seen anything close to that. Chairman Volcker increased interest rates twofold, not 24-fold.
Right.
So that was part of the regional bank crisis. And notice Bitcoin went up during that. So, and it is true, it probably was anticipating the financing program that the Fed put in place, which was a bit of a jog toward easing, and then it went back, a reverse course.
Mm-hmm.
So we think that the Fed is going to cut rates. Now, there are a lot of confusing economic data. We hear something from companies and something very different from the government in terms of economic activity. They're not matching up. They're not matching up at all. And so I find that very interesting. I think the Fed is going to figure out that there is much more stress in the system, that the regional bank crisis was the first sign of it, and we'll get other reminders, and that they will move into a rate cutting. Now, what we really think is going to happen is it's going to be less about real economic indicators. It's going to be about price deflation. We think, and Walmart has said, we're going to have to cut prices. That's deflation. That's not disinflation even, it's deflation. And I believe the Fed is going to be shocked at broad-based price deflation this year, and that will be, they're using now inflation as their primary gauge. They're not as focused on real economic activity because inflation has come down even without a recession. I think we've been in a rolling recession, but nonetheless. So inflation is the primary variable they're watching. We think there's going to be deflation, so they'll get 2% all right, and it'll keep falling. So they'll lower interest rates. That will be very good for risk assets, and Bitcoin among them. It was interesting. I think it was in late in the fourth quarter or earlier in January, Bitcoin led the market. And so if began to, and so we're watching Bitcoin now. And of course, we're having a sell on the news moment after the 11 Bitcoin ETFs are approved. And I don't know how far that's going to go. This is high frequency trading. It's people getting in just for that short boost and now getting out. But institutions and these retail platforms are going to start moving in, and then we'll see the scarcity values. After this election, I don't think Chairman Gensler will remain at the SEC, whoever's elected. I think he has aspirations for some kind of political appointment, so he may go for that reason if Joe Biden is reelected, or he will go altogether if a Republican is nominated. So, yeah, the SEC could drag its feet, but I think the court cases have spoken pretty loudly. We have the Coinbase hearings. We'll get lots of information about what is not a security during that trial. So I do think that raises the odds of an Ethereum spot approval. The Gensler could be in the way, but we do think it will be approved.
Amidst this, the Securities and Exchange Commission's case against Coinbase is underway. Last year, the SEC accused Coinbase of facilitating the trading of unlisted securities. Allegedly, Coinbase operates as a broker, exchange, and clearing agency for unregistered securities, including Solana, Cardano, Matic, Fcoin, Sand, AXS, Flow, Dash, and others. However, Coinbase defense argues that these assets are commodities, akin to Bitcoin and Ethereum, which have received SEC approval. During recent court proceedings, Coinbase lawyer, William Savit, likened cryptocurrencies to collectibles rather than securities, emphasizing that investors don't hold stakes in a company. This case's outcome carries significant implications for the cryptocurrency industry. Bloomberg analysts heavily favor Coinbase, with New York District Judge Catherine PFA pointing out the SEC's overly broad definition of securities. Bloomberg senior litigation analyst, Elliot Stein, suggests that the judge's questions indicate the SEC may have already weakened its case. He highlights Coinbase's argument as more persuasive, requiring investment in a business rather than just an ecosystem. The prevailing belief is that Coinbase stands a 70% chance of prevailing against the SEC, either immediately or in subsequent legal proceedings. Even if the case proceeds to the Supreme Court, it's anticipated that the definition of securities, specifically the Howey test, will be narrowed. In her interview, Cathie discusses the significance of the Coinbase case, impending crypto regulations, and the impact of Bitcoin ETFs on crypto adoption.
I think that Coinbase is going to do us a great service through the court system, and the court system is going to do us a great system. You know, if you look back in history, we have had an experience like this before. It was when derivatives were launched, and the SEC and the CFTC were vying for power over regulatory power over derivatives. It went all the way to the Supreme Court, which this probably will. And that forced legislation so that both the SEC and the CFTC have a role in derivatives oversight. But those roles are clearly delineated and they don't cross over. I think the same thing's going to happen here. This could be an election year issue. And I think that's one reason we are seeing so many congressmen getting so well educated on what this is. I mean, I heard Congressman French Hill a couple of weeks ago, and I said, "Wow, he's come up the learning curve so quickly and knows so much. This is fantastic." Knowledge and education. Knowledge is power. Education, obviously, is the route to knowledge. So I think, yes, I think the odds, I don't know how high they are, but in the next 2 years, I think the odds of legislation are very high. I don't know how the election year complicates it. I do know that there are voters out there who are one-issue voters, and they are crypto voters. And I know that Washington is hearing that loudly and clearly. I think when people put something in their portfolio, they're apt to watch it a little more closely and maybe seek out a little bit more education, even if their advisors have put them in. And certainly the advisors have to educate themselves. So I think once more and more people educate themselves and understand what this is. It's a technology, yes, and it's a monetary system. Then I think they're going to understand why it's taking off in emerging markets and why everyone should have a little bit of an insurance policy called Bitcoin. And last year, the regional bank crisis was a great case in point. I think many people were shocked as regional banks, the KRE, the regional bank index, was imploding. Bitcoin took off. It went up 40 to 50%. And it was the first time that traditional investors, many more, took note. Wait a minute, why did it do that? This is supposed to be a risk-on asset. It's supposed to be very volatile and highly correlated with risky assets. What just happened? And what they learned there was that, hey, it's a risk-off asset too. Why? Because there's no counterparty risk like there is in our banking system. You're not going to be held hostage like you were in 0809, wondering if your bank was going to survive or you'd get any more than 250,000, the guarantee, the FDIC guarantee out of your bank. So this doesn't happen with Bitcoin. Education. Wow. How many risk off and risk on assets are there? So I think the more people come in, the more they'll be comparing and contrasting what this is to what we have in the traditional financial world. And guess what? This is better. This is better. And it is why emerging markets talk about needing an insurance policy in hyperinflating economies. It's an insurance policy against counterparty risk, inflation, and deflation.
Paul Grew, Chief Legal Officer at Coinbase, asserts the exchange's readiness to confront the situation and safeguard the cryptocurrency industry from further political maneuvers. Grew recently underscored that the SEC's accusations against Coinbase are baseless, as the exchange does not deal in securities. In his latest statement, Grew emphasized Coinbase's arguments presented during the motion to dismiss the SEC's lawsuit. He highlighted the SEC's attempt to assert broad authority over all investments without providing a clear definition of investment contracts. Grew stressed that such regulatory expansions should be subject to congressional approval and ongoing legislative discussions. Coinbase maintains its stance that it does not offer securities and expresses confidence in its legal position. Grew anticipates a decision that will bring clarity to the industry. Regarding who holds the advantage in this situation, opinions vary between Coinbase and the SEC. Share your thoughts on both sides and also your reflections on Cathie Wood's interview in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.